Hi! This year 2020 itself, US suffered a few times or they experienced a few times circuit breakers, and Malaysia itself, we even for futures product we experienced before limit down. But for these two terminologies, many of the investors and traders, they are quite confused. They thought that circuit breakers is like limit down or is a vice versa, or limit down is equivalent to circuit breakers as well. But these are two different terminologies. We are going to explain to you what is the difference between circuit breakers and limit down. First of all, welcome to our excellent trading and investing YouTube channel. My name is Ting Ting. Please remember to subscribe to our YouTube channel and please on your notification bell. Now, we are going to start with today's discussion about circuit breakers and limit down. What is the main difference between circuit breakers and limit down? Many of you thought that they are the same, but actually they are not the same. Now, let's start with the first concept called circuit breakers. Basically, in Malaysia, we only have one product, which is the FBM KLCI. They have the circuit breaker. Other than that, the rest of the products, you only have limit down or limit up in a way. Especially for futures product, we have limit up as well. But in Malaysia, we only have FBM KLCI that will experience circuit breakers. So once circuit breakers triggered for FBM KLCI, anything related to FBM KLCI like your FKLI, your stocks, your warrants, etc. will need to stop in tandem as well. Now, these circuit breakers, what is circuit breakers? Mainly to avoid a major market retracement. So in a way, they give you some time, some cooling off period for you to think about it and not to rush to sell it. So FBM KLCL, we only have circuit breakers. The rest of the products, we have limit up, limit down, mainly for limit down, especially for your stocks. But for your futures, we even have limit up as well. So that is the main difference, first thing that you need to know. Now, we are going to study the rules behind for circuit breakers and also limit up or limit down. Now, first thing, according to circuit breakers in Malaysia, the last time it happens is way back in 2008. I repeat, the last time it happens is way back in 2008. What happened is on 10th of March 2008, after our general election, which happens on Saturday, which is what we call as 308, if you can still remember. So after that, that's the first time in Malaysia history, we have 5 states forced into opposition parties. And with that, on Monday, we experienced a gap down for our Malaysia market. Then it triggered a circuit breaker subsequently. Later, I'm going to share with you. But before you understand what is happening or it happens before in Malaysia, let's look into what is circuit breakers. Now, first thing, let's say based on the closing price, can you see? You just follow my cursor. FBM KLCI, if yesterday closing is at 1,005, so our first level that circuit breakers will be triggered is at 10%, unlike US, which is at 7%. Our side is 10%. So 10% based on yesterday closing 1,005, 10% is 150 points. So if you take 1,500 minus 150, it will be 1,350. So at any point in time, if our FBM KLCI break below 1,350, then it will trigger the circuit breaker. This is the first level. So first level, what do you need to know is, if this first level being triggered within 9 to 11:15 or 2:30 to 3:30 second half, the market will halt for 1 hour only. So let's say it was being triggered at 9:30. So it halt for 1 hour, meaning 10:30 we will restart the market. But if it triggered after that, from 11:15 to 12:30, trigger anytime, it will halt for the rest of the trading system. So if I'm not mistaken, in 2008, we triggered between 11:15 to 12:30. So we stopped for the remaining of the trading system. If I'm not mistaken, it's about 11:30. Then second half, we continue. So what happens in 2008 is, on Monday itself, we gap down 8%, about 8% plus. Then we trade all the way until 10%. Then it triggered the circuit breaker. We halt at 10%. Then second half, from this 10%, they will increase to 15%. Can you see that? From 10%, they'll increase to 15%. And if this level triggered within 9 to 11:15 or 2:30 to 3:30, it will halt for 1 hour, the same. If it triggered after that, then it will halt for the rest of the trading. So what happened in 2008 is first half it triggered 10%, then we halt for the remaining of the day, the first half. Then second half we continue. The market dropped further to 12%, then we rebounded from there all the way. So it's very different. We only triggered at the first level. We never even triggered to 15%. US triggered before at 13%, the level 2. So very different. We start at 10, then 15%. Then the next final level would be 20%. If we triggered this, then it will halt for the rest of the trading day. Because 20% is quite major, is very major. I wouldn't say it's quite major, it's very major. That's why it will halt for the remaining of the trading day. Now, looking at limit down. So Malaysia, we have two most traded by retail traders, which is FKLI and FCPO. So we have a limit down. In fact, for these particular products, we have limit up and limit down as well. So it's the same rules applies. But normally we have suffered limit down because we have so-called as fear, people's fear of it, market fear, then people are dumping or people are throwing. That's the reason caused the market to go further lower. But upside, normally people will not having the fear or rushing to buy this kind of situation. So we are looking at limit down more. So for Malaysia, for FKLI, individual situation, we have limit down. Normally, it's very difficult to trigger this limit down because you know why? Your FBM KLCI and your FKL is quite in tandem. So if FBM KLCI is going to suffer a circuit breakers at 10%, there's I would say that the chances for it to reach, for FKL to reach 20% is relatively low. So far, from my memory, we never suffered limit down for FKLI before. There's only once that we suffer for circuit breakers is way back to 2008, because when FBM KLCI triggered circuit breakers, anything related to that, like for example your stocks, FKLI, warrants, etc., will need to halt in tandem. So that is the concept. So Malaysia, except for spot month, we don't have a limit. If it's spot month, because why they don't impose any limitation, I believe it's because they track FBM KLCI very closely. So you don't need to have another layer of limitation or rules, because your FBM KLCI, it will trigger the circuit breakers at 10%. FKLI will need to stop in tandem as well. Second, if the second month, it approached the last 5 business days before expiration, they don't have any limit as well, because last 5 business days, normally the second contract months will be very closely tracked against your FBM KLCI. So the same things, they don't really need to have this kind of rules, additional rules. And the last one is 20% will applies to the respective contract months, except for spot month. So it's very clear cut, very direct. So this is 20%. Now for FCPO, but CPO a bit different for your FKLI is because if FKLI or your FBM KLCI having the circuit breakers, your FCPO can still continue to trade. It's a different thing. So when it comes to FCPO, we have limit down. So whatever rules applicable is not for spot month, because spot month basically is physical delivery, is not applicable. And another thing that you need to take note is for FCPO, we refer to settlement price rather than closing price. Do you see that? Just now FBM KLCI is referring to your closing price, but FCPO we have settlement price, so we refer to settlement price. Because in futures trading, settlement price might not be equal to your closing price. What is the difference? Closing price is based on your last traded, the last contract being executed. But your settlement price, sometimes especially for illiquid months, very far away, the month's very far away. Let's say throughout the day, there's nothing being traded, last contract traded very far away. So they cannot take that as a closing price. So they need to do some amendment, massage the figures, then only you can have the settlement price being imposed. So this settlement price, technically, might not be equals to your closing price. So we take this settlement price as the last, but if you really cannot understand, you just take it as the closing price. Normally retail, you trade the active month, closing price is very close to settlement price or even equivalent to settlement price. So for FCPO, first level is 10%. So let's say, for example, yesterday closing is 3,000, so 10% is 300 points. So once your FCPO 3 active month trigger 10%, then they will trigger this limit down. They need 3 months, 3 trading months. So they will trigger this limit down. 3 months, not only 1 month, 3 months, then they will trigger this limit down. Then from this limit down, what is going to happen? You are going to refer to this part, which is the rules. So if 10% limit down is triggered during the day, first thing you need to know that they will have a 10 minutes cooling off period. So during this 10 minutes, they hope that there's news being provided in the market, then you will know what is happening. At least you keep yourself updated what is happening, whether you still going to sell your FCPO or not. So they will have a 10 minutes of cooling off period. Subsequently, they will have 5 minutes of pre-opening stage, similar to some things that before the market open, every session 10 o'clock to 10:30 we have a pre-opening stage. So the same is going to apply after the cooling off period. We have a pre-opening stage of 5 minutes. Then subsequently, they will allow the 10% to be increased to 15%. Now, there are another 2 rules that you need to know. If this triggered 30 minutes before the end of first trading session, then the 10% will apply for the rest of the first session. Then second session will automatically increase to 15%. Now, but if this triggered on the second session, last 30 minutes of second session, they will only trade 10% throughout the second session. Technically, it's throughout the remaining of the trading days. So what happens this year for FCPO, we also suffered before once. If I'm not mistaken, it's once, which is limit down for FCPO. That is if I'm not mistaken, happened after 5:30. It's just roughly maybe 5 minutes after 5:30. That's why for the remaining of the trading days session, they only limit to 10%. It did not increase to 20% because 15%, because it happens at the last or final 30 minutes of second half. So they will put it as 10%, meaning so long as the price is going to trade within the 10%, you're allowed to trade, but you cannot trade anything more than the 10%. You can still do some transaction. If the price between buyer and seller, they are willing to take the price, you can still trade within the 10%. So these are the things that you need to take note. So I just do a very short recap before we move into what you need to do if you face with this limit up, limit down, or circuit breakers. Now, before that, remember circuit breakers only applies to FPM KLCI. Then for FCPO, FKLI, we only have limit up or limit down. Now, if you face with these scenarios, what you need to do? 2 things. First thing that I need to highlight is, if you face with this situation, first thing, remember, don't make any decision. Let the dust settle down first. I repeat, don't make any instantaneous decision. For example, you worried, you have the fear, don't sell first. You let the dust settle down, let the market settle down, that only you do. Because these are all people, they are having the fear. So it's all emotion. Let these all emotional traders sell or buy or close their position, then only you move into the market, you will get a fair price, I would say. I wouldn't say 100%, but I would say based on history, you can see that most of the times this will happen. So this is the first thing that you need to know. Layman terms is you are seeing two person, they are fighting. If you need to join the fight, you don't fight now. You let them fight, finish fighting, then only you go and fight. You consume your energy first, then only you go and fight. The chances for you to win is higher. Second things that you need to know when it comes to, unlike your stocks, Stocks today, if I'm suffering limit out 30%, tomorrow I might continue to suffer another 30%. The day after, I might continue to suffer another 30%. But for futures, normally it's the whole market, the general market. So even you suffer for FCPO 10%, right? That is a lot. That's considered major already. Like for example, right now 3,000 ringgit Malaysia, 3,000 per metric tons. If 10% is already 300, that's a lot already. So for futures, normally I'll encourage you, maybe you can wait until the next day, then only you make your decision. So especially if the limit down happens second half, you don't do anything, you wait until the next day, then only you make your decision, because at night you can think it over. But if it happens the first half, then you can consider during the lunch break, think about it. What is going to happen subsequently? Where is your fundamental? Where is your technical, etc.? So in general, you just let the dust settle down. That's very important. So I hope that those circuit breakers and limit down is going to help you. They are able, subsequently you are able to differentiate what is circuit breakers and what is limit down. They are two different things. Many of them, they mix it up. They thought that both are the same. Now, thanks for watching this video. Please remember to subscribe to our YouTube channel and please on your notification bell. We are going to see you next week. Next week we have different topic. Bye.